Ladies and gentlemen, good day and welcome to the Q3 FY24 earnings conference call of Patel Integrated Logistics Limited, hosted by Capital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Vikram Suryavanshi from Capital India Private Limited. Thank you, and over to you, sir.
Thank you, Michelle. Good afternoon and very warm welcome to everyone. Thank you for being on the call of Patel Integrated Logistics. We are happy to have the management with us here today for question and answer session with the investment community. Management is represented by Mr. Mahesh Pogla, Executive Director, and Mr. Avinash Paulraj, Company Secretary. Before we start with the question and answer session, we'll have opening comments from the management. I will hand over the call to Mr. Mahesh Pogla for opening comments. Over to you, sir.
Thank you, Vikram and his team for organizing this call. Very warm welcome to all present for this earnings call of Patel Integrated Logistics Limited. We are highly obliged for taking out your valuable time and attending this call. Now let me explain you financial number for this quarter and for the 9 months ended December 23 for the benefit of all of us. Income from operation for the quarter, first I am reading out the number for the quarter ended 31st 12/2023. Income from operation 90 crore 51 lakh. Other operating income 12 lakh. Then total gross income from operations 90 crore 63 lakh 14,000. Less GST recovered 13 crore 82 lakh 0.52. Then the net total income from operations is 76 crore 80 lakh. Other income is 69 lakh. Total income after GST is 77 lakh 77 crore 49 lakh. I beg pardon, it's my mistake, I'm sorry. I'm again repeating, total income is 77 crore 49 lakh. Again that the expenses are, operation costs are 69 crore 62 lakh. Employee benefit expenses are 3 crore 14 lakh. Finance cost 57 lakh. Depreciation and amortization is 70 lakh. Admin and other expenses are 1 crore 96 lakh, making the total expenses 75 crore 99 lakh 84,000. If you just for rounding off, it becomes 76 crore. And total income is 77 crore 50 lakh rounding off. And total expenses are 76 crore, leaving us the net profit before tax of 1 crore 50 lakh. And profit after tax is 1 crore 49 lakh 19,000. After the Ind AS adjustment of other comprehensive income, we have a total comprehensive income for the quarter is 2 crore 80 lakh 40,000. And now I will read out the number for the 9 months ended 31st December 2023. Income from operation for the 9 months ended December 2023 is income from operation 2,241 crore 18 lakh. Other operating income 35 lakh. Total gross income from operations 241 crore 54 lakh. Late GST 36 crore 84 lakh. Total income from operation after GST 204 crore 69 lakh. Other income is 1 crore 43 lakh. Total income after GST 206 crore 30 lakh for the 9 months ended 31st December 2023. Again, that the expenses are operation cost is 183 crore 66 lakh. Employee benefit expenses are 9 crore 51 lakh. Finance cost 1 crore 77 lakh. Depreciation and amortization is 2 crore 10 lakh. Admin and other expenses are 5 crore 10 lakh, 19 lakh. Sorry, it's again repeating 5 crore 19 lakh, 19. Total expenses of all these adding up is coming 202 crore 25 lakh. And after total income minus total expenses are 3 crore 87 lakh. Profit before tax is 3 crore 87 lakh. And after the tax, the profit is for the 9 months is 387.04 means 3 crore 87 lakh. And other comprehensive income adding up 56 lakh. Total comprehensive income after the tax is 4 crore 43 lakh 0.98. Repeating 4 crore 43 lakh 0.98 for the period ended 31st 12/2023. That will go to the reserve. And just to extend that one only for the operating segment which we voluntarily disclose under Ind AS 108 for the better transparency and disclosure norms. We have a segment revenue for the air freight division is for the 3 months is for the 3 months, that means the quarter ended 31st 12/2023, 89 crore 89 lakh, and the others is 73 lakh. And the before GST and after GST net sales income from operation, as I was mentioning overall, is 76 crore 81 lakh. And the segment result, that means the income minus expenses is before the finance cost is 2 crore 33 lakh from the air freight division for the quarter, and the other is negative 38 lakh. And after deducting finance cost 36 lakh, interest income added 11 lakh. Profit before tax is 1 crore 50 lakh. Profit before tax repeating 1 crore 50 lakh for the quarter ended 31st 12/2023. And again, they are different. And about the segment asset, our co-loading of freight division is represented by 110 crore 59 lakh. Others are 63 crore 36 lakh. Total segment assets are 173 crore 96 lakh. Segment liabilities are co-loading of air freight division means our air freight division has a 38 crore 67 lakh. Others have a 13 crore 86 lakh. Total capital employed is represented by segment asset minus segment liabilities. For air freight division is 71 crore 91 lakh, and for others it is 49 crore 50 lakh. Total is 121 crore 42 lakh is the net worth of the company. And for the 9 month ended 31st December 2023, revenue is for the air freight division 239 crore 7 lakh. For the others is 2 crore 46 lakh. And just after the GST it become a 204 crore 69 lakh. And the segment result, co-loading of air freight division after the before the finance cost and the interest income is 6 crore 37 lakh. And after the finance cost, after the finance cost and interest income, profit before tax for the 9 months ended 31st 12 2023 is 3 crore 87 lakh 78,000. As is the balance sheet item, which for the quarter ended and for the 9-month ended, segment assets, liabilities, and the capital employed will remain the same. So for the sake of time, I'm not repeating that one. And now I'm just highlighting some financial key highlights, which may be a little repetition, just for the cost of repetition and for the clarity of all of us. I'm just mentioning the key financial highlights for the Q3 FY24, means quarter 3 ended with 31st 12 2023. Income from operations grew by 25.6% year-on-year to rupees 90.51 crore as compared to rupees 72.04 crore in quarter 3 FY23, primarily driven by increase in sales volume. Profit after tax, that is PAT, increased by 28% to rupees 1.49 crore from rupees 1.16 crore in quarter 3 FY23 due to saving in the finance cost also. Key operational highlight for quarter 3 FY24: increase in sales volume both quarter-on-quarter as well as year-on-year. Quarter 3 FY24 sales volume increased to 15,115 ton, 15 ton from 13,873 ton in quarter 2 FY24 and from 13,183 ton tonnage, I'm talking about again tonnage, in quarter 3 FY23, same quarter of the last year. Further, just to give you a glimpse of our financial highlights and the quarter under review, we able to achieve a increase in our turnover in this quarter despite a dip in APF prices, which were in the first of the quarter was per kg 1,18,199, which as on 31st December decreased to 1,06,155. And this shows our single-minded focus to simply drive growth. We are able to achieve the increase in our turnover in this quarter. Further, during the quarter under review, the company successfully monetized non-core assets, that is the Chennai land, and further in the some investment also we sold off, executing strategic agility and resource optimization, proactively pursuing inorganic expansion through EPS accretive acquisition remains our top priority. We are looking for opportunity to grow both organically and inorganically. But we are not desperate also at the same time. So if very good opportunity comes, then only we will take it. And I'm happy to inform you that we also got registered under Open Network Digital Commerce. We all know it by ONDC, to capitalize on the opportunities, rising opportunity in digital e-commerce within the country. This step will position us at the forefront of the evolving landscape. Further, we have also our focus on now on the trade receivables control to monitor the quality of the trade receivables as a part of risk mitigation measures. We are very much committed in delivering value to stakeholders and in navigating market dynamics, which are very much changing every day, so that we can achieve sustainable growth and success and add value to all the stakeholders for the company, all the stakeholders of the company. Further, just tell you maybe little bit of repetition, but just I want to highlight the mobile app. We have launched a mobile app which we call it Freight Fill mobile app. Our company name is Patel Integrated Logistics Limited. Is in the short form we call it Fill. That is why the mobile app name is Freight Fill mobile app, and it is an enterprise information system software ERP that enables users to capture operational information in various technical situations. Now I would like to explain this app in a little bit. Though this is a part of our digital transformation journey, and for that we prepare the mobile app. Endeavor is to make all our operations paperless, and at the Digital India, and we are all in the part of now Digital India. We want to make our operations also totally digitalized. We just to explain a little bit further, when we receive the load at the airport or at the just before the flight departure, we were till now entering data manually in the pre-printed e-way bill, and also for transfer or movement of load from one branch to another, also we were using the manual e-way bill, airway bill. I mean to say airway bill. Just to correct myself, it's not the e-way bill, the airway bill. To address this challenge and as a part of the digital journey, we have first of all have upgraded our operational software into a Freight Fill application, which is compatible to all browsing platforms in all the and it is not that it is dependent on one platform. It can be compatible to all the platforms. Further, with the mobile app, we can take the load into mobile as well as also not to depend only on land. So further, with the mobile app, you can take the load on mobile as well, and not to depend on the laptop or desktop for booking the load. Load or volume, in our language we call it load, but volume or load is one and same. Further, for the age of operation, we have two mobile apps developed. One internally in the organization for movement of goods, or for tracking or tracing or giving any issue in the operation to totally make it paperless. And how it will help people sitting in any part of the country or anywhere, which they can use this mobile app, and it will be a game changer for us. Because we are a company which are pan-India company, we have a network all over India. So we require a facility where people anywhere sitting anywhere can use this app and can work for them. This will definitely not only for the company, it will enhance the customer experience in many folds. And we are in the process of completely stopping the manual airway bill and make our operation paperless as a part of digital journey. And further, just to coming back to the country now, definitely just now the government has presented the interim budget. Our Honorable Finance Minister also mentioned about the aviation sector, and there is a lot of trust government is giving on the aviation sector. We all know there are big order plays in form of passenger aircraft by both Indigo and Air India. We have also new airline, Akasa, coming very well. So we are all very positive about the growth of the sector and in turn growth of our company also. Further, we are also for the non-core assets which are in the company, we are continuously talking with the people how to monetize and to have to monetize the best way. However, we will not be, again repeating, we are not desperate, so we will only go for the opportunity which is beneficial for us, whether we go for any inorganic acquisition or we monetize our non-core assets. Another thing is that now, hopefully, we all of us, and the logistic company like us, which are in a country for a long time, we get a level playing field. And now that for a logistics startups which were growing very fast, have a funding winter, and we all have a level playing field, and there will not be a unnecessary dumping of the capital by a PE investor in the logistics and creating a unnecessary issues for the logistic companies which are always look for the profitable growth. I'm happy by this. I stop myself and request Vikram to take it forward, please.
Thank you very much, sir.
Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on the touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. Participants who wishes to ask questions may please press star and one now. We'll take the first question from the line of Vikram Suryavanshi from Phillip Capital India Private Limited. Please go ahead.
Sir, can you repeat the volume number for this quarter and last year same quarter?
Yeah, Vikram, definitely. Just give me 1 second. Our quarter 3 FY24 volume was 15,115 tonnage, and for the immediate preceding quarter was 13,873, and same quarter of the last year it was 13,183 tonnage.
Okay, got it. Yeah. And what I think the development about the sale of Chennai land and the proceeds, any update? Have you received the money? And
Yes, Vikram, we received the money and we are keeping the money in the fixed deposit right now, and we are just looking for the right use of the fund, allocation of capital, and we have kept it totally in the fixed deposit and bank that money. We have received the money.
okay, and there was also planning to construct a new warehouse in Maharashtra.
Yeah.
Any update? Yeah.
Correct, Vikram. We are in the process now, but it's taking a time, but we are hopeful to close that matter also in the next 2 months.
Okay. And how big that will be? Any idea? Or it will be single customer or multi-customer?
Right now it will be difficult to tell, Vikram, because it is a very preliminary stage. If the things progress well, and definitely I will come and say it to all of you.
Okay. And we are seeing good growth in terms of volume, but how is the outlook going forward in terms of volume growth or pricing front? Is there any challenge, or can we see improvement in the profitability or pricing along with the volume?
Yeah, there will be, as I was explaining earlier calls also, there will be for the our price also depends on the ATF also, because 30 to 40% cost is part of the ATF. So we are hopeful that ATF we will able to keep the momentum which we are there right now, and Profitability definitely will not be a challenge for us because we are keeping a sharp focus on the profitability. And about the volume also, we are expecting to keep the momentum what we are there right now.
Okay. So if you look at currently what we are doing around like say 5,000 plus minus on monthly basis, that run rate we are expecting or is there the like 10-12% growth we can expect next year?
Next year, definitely, but our first priority now to conclude this financial year, March ended, and then definitely we will take our budgeted and think to internal planning will do. And things are looking very good actually as the economy growing and we are a major player in our area of operation and we have a ecosystem which is pan-India basis there. So definitely as the economic growth and we are all growing, so our company growth also is bound to happen.
And in volume, how is the breakup between international and domestic? Broadly.
Yeah, correct. For the volume definitely the larger volume comes from the domestic only. And then around I can talk about to you around 15,115 is for this quarter. In that, around one can tell you 2,000 is from the international and balance is from the domestic. So definitely you can talk about around less than 10% come from the international.
Okay. But profitability is more or less same or international way how would you?
There is Vikram, what happened in international profitability will be lower, but receivables will be coming faster. While in traditionally as an industry practice, domestic profitability will be higher, but the receivable takes time to recover. So we have to keep a balance on both of them, and we have to keep a very vigilant eye to see that the thing don't go out of control also, and be able to maintain our growth also.
Got it. So we'll wait for some questions, sir, and if there are no questions, I'll come back here.
Thank you. Participants who wishes to ask questions may please press star and one on the touchtone phone now. You may please press star and one to ask questions. We'll take the questions from the line of Vikram Suryavanshi from Philip Capital India Private Limited. Please go ahead.
Yeah, Vikram, before you start the question, I just want to correct myself. When you ask the international composition between the international and domestic volume, roughly the international is around the 13 or 14% of the total volume of the business.
Okay.
Not less than 10%. I'm correcting myself. Sorry.
Okay, I got it. And how is the progress? Because I think there was a possibility of land or building monetization. Anything happening on that front or in material development you would like to share?
Yeah, that is on the it is going on because another thing is that when we talk about all the property, our team is also working on with the register to do the necessary paperwork and all this one. There are a lot of, as you know, in India, there are a lot of time take for anything being to close and to regulate the paper and all this. They are already in the process of that one also. So it's going on, but it will take time and things are in. But as I can tell you, we are on the job. Definitely, we are on the job.
All right. And in terms of coming back to the basic businesses, which are the sectors where we are seeing good growth or which are the sectors which contribute to more revenue for us?
We definitely when the festive season comes, that the e-commerce give us the better growth. But at the same time, being a pan-India company and we are not depending on a single sector or something like that. So we don't focus on any particular customer or the particular sector to as a part of risk mitigation measure. And we are seeing overall growth in our volume.
Got it. And any chance that coming back to surface express business in future or will more consolidate on express only as a consolidator?
Yeah, as I was mentioning, we are also in the process of not only growing organically, but we are also looking for the inorganic if something very good opportunity come up. So we are not ruling out the possibility of the whether it will be a air or it will be a surface. If something very good opportunity come up and it is the EPS, accretive, organically or inorganically, we will definitely want to pursue that opportunity and go ahead.
Okay. And last question from my side, what would be debt and cash position currently?
Yeah. We have a positive cash as we are maintaining ourselves, and we have a debt of the around, we are a net cash positive company, and just for the, we are carrying the debt of the book around 20 odd crore we are carrying now.
Gross debt.
Yeah.
And cash would be how much, broadly?
Definitely we are a net cash figures are there. It will be definitely we will be more than the debt, I believe, because we are net cash positive company. So with that money, fund is not a problem for us, like such would. We are open for any good opportunity always.
Understood.
And we enjoy good relation with the bank also and all the stakeholders as I am talking to you, we have a partly paid shares which were some part of the shares were not very out of 4 crore, only around the 50 lakh, no? Around 50 lakh, no, not 50 lakh, 40 lakh, sorry, I beg your pardon. Out of 4 crore shares, 14 lakh shares were somehow not remain unpaid and something is there. So as a part of the compliance measure also and as a shareholder benefit also, we may come out with, we are coming out with another small right issue, which will also give us another fund. And we are expecting some refund from income tax also in some part of the time. So fund will not be issue for the growth or for the business.
Okay. What would be the intention for rights issue? Main reason?
No, it's more about not about the fund raising exercise, it's more about a compliance measure and not for us only, because when we done the last right issue of 4 crore right issue, we have done a partly paid and fully paid in 2 tranches. So when people actually subscribe for the partly paid and the 14 lakh shares out of total of 4 crore shares, less than 3%. So what happened, they remain now as a part of the thing we have to get it subscribed. For subscribing, we cannot take a very small event, so we may come out with a around between 5 crore to 10 crore right issue, and this time definitely it will not be at the par. It will be near to the market price. That was earlier whatever thing is there. So it more a very small right issue we may have to do for that purpose. So fund that will also come to the kitty only of the company.
Okay, understood. Yeah, that was helpful. Yeah, thank you.
Thank you. Participants, you may please press star and 1 to ask questions. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yeah. Thanks a lot, Vikram and the Chorus team for organizing this call. I hope it clarified the query, and I understand there may not be any question much, but I understand people are listening, many people are listening, and after the call they call me also. So thank all of them for hearing this call and taking out their time for attending this call. Thanks a lot again to Vikram and his team for organizing this call. Thank you.
Thank you, members of the management. Thank you, sir. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.